So yeah, welcome back, guys. So welcome to the afternoon session, and I will be starting with my talk at this point of time, and we'll keep on taking questions in the chat in between if you have, or maybe I will answer at the end of my session. So the stock that I'm going to present today is something from a SME side. So
Hey
if you
Puneet,
see,
this is Amar. Sorry to
yeah,
disturb, but
yeah,
suddenly that recording option has gone away for me. Something changed, yeah?
uh,
I don't see
okay,
that more
just
option.
try now. Actually, looks like since we restarted the session, I think the settings are reset.
You have to make him co-host.
Correct. Let me do that. Yeah, now you can check.
Yeah, I got it now, Puneet.
Yeah,
Sorry about that.
no, that's okay. It's good you interrupted initially itself. So this is an SME company we are going to talk about, and this is into entertainment and media basically. So there are few films like Cats and Dog, and some of the names you might have heard here: Avengers, Little Mermaid, right? 2.0, Shakuntalam. So some of the movies you might have seen. What is common across all these movies? So we try to see and we judge something on, okay, this studio was common, this director was common, this actor was common, but it is something visual effects which are common among these movies. And these effects are done by an Indian company that has made these movies a visual delight and provided millions with entertainment and lasting memories. So we are talking about our next idea, which is Phantom Effects. So which has done these movies and provided the visual effects in the background. So what is a visual effect that we'll see? It's a kind of a special effects that will reflect the story's visual representation. Some of the scenes that cannot be realistically or practically can be done, they use the softwares to make those scenes. And sometimes some of the scenes would be very, very expensive, and this kind of visual effects can bring these scenes at a limited cost into the movie. So this is a kind of a mega trend actually, which is coming up in India and across the world also. If you see the Western movies from lot of time, like maybe 2 or 3 decades back itself, you would see lot of effects in the movies, and you would be wondering, okay, what a movie it was. And you're talking about the visual effects of that movie, not about the actors part of it, maybe at times. So that thing has started coming back to India, and lot of offices are being opened up in India recently, and lot of studios have come up also doing the same thing. And why we are choosing Phantom, I will describe down the line today, because they have certain capabilities which other studios might not have as well. So before we go there, there would be two fun facts we need to see. 10% of every movie in any genre accounts for 10% VFX usage. So even if we were watching the movies, sometimes we don't feel there is a VFX effect. But 10% of every movie in any genre, maybe Bollywood, Tollywood, whatever domain it is using VFX in the background. And 90% of all movies have some form of VFX involved nowadays. So what VFX can do, let's see through this video, so which is a Phantom video itself.
We cannot hear. I don't know if it's on purpose.
No sound. Puneet, we cannot hear anything. We are only seeing some video.
Yeah, guys. So I just demonstrated a small visual effect thing. Of course, the audio would not be directly available to you. I will share that link. You can go through at your side as well. But you might have seen the impact that those visual effects can do in a movie. So from that angle, when we look into this company, I see that it's a mega trend. Like 10 year, 20 years, this trend is not going away. And there could be small work that would be keep pushing to these companies. Okay, this can be done with visual effects or not. Can this be taken up as a small activity? And after the post, after all the schedule has been done, they want to add something more into the movie. Then those kind of things will start coming. So we'll go to this company and start to understand what is this company about. So this is a creative VFX studio that started in 2016, and it has lot of specialization in completing a shot with final composting, creating 3D elements, creating photoreal pictures. And there could be small manual work, which is into rig wire removal, paint cleanup, rotoscopy. This is third line is where a lot of companies would be there. And we have to see why Phantom would go up apart from this company as well. So there could be a 3D animation. So animation is one field which is still catching up. So you see, you take up your children to the movie hall for a lot of animation movies nowadays. So the movies that Pixar or those kind of companies are making in the past, they're outsourcing their work to Indian companies in that domain. So this is one domain which will again catch up in the animation side. Then the game cinematics. Gaming is another arena where they are trying to do the things which other studios are not venturing into right now. So there could be some specializations here with this kind of a company and where we need to focus upon. Now, coming to the stats part of it, they have a clients of over 500 members. They have 3 studios in India, in Chennai, Mumbai, and Hyderabad. 3 marketing teams in Los Angeles, Vancouver, and Montreal. Office space is big enough and they are expanding. Repeat clientele is 46%. They are coming back to them. Despite one doubt people have is, okay, there are a lot of many studios, they are mushrooming like anything. Why they will come, why the clients will come back to this company? The repeat clientele is 46%, telling us they are doing something for those companies. And we will show one notification also recently where the client has come back recently only. Now clients associated for more than 5 years, 25%, which is again a good number. International business versus domestic, it's in a 40 to 60 ratio. 40% is international and 60 is domestic. And this company is going towards 50-50 in both the domains. Basically, they are trying to target 50% from the international business, from where the margins will get up more. Now, promoters have significant industry experience and they have been instrumental in the company's success and consistent growth. Bijoy, the person, is a kind of a veteran. He's coming from this computer generated imagery space and it has a good experience of 200 plus films actually. And he is the person who is driving this company very well. He is the founder, MD, and CEO of this company. There are some other heads which are CEO and VFX heads also. They also have a very good experience of 15 to 20 years in different domains. And those are the people who are responsible for driving this company forward. And looks like a good management space with experience. Now, clientele, they have a very strong relationship, which we already see with the kind of repeat clientele over whatever the repeat work they're getting and the repeat clientele over 5 years and the people who are staying with them for so long. So once a showcase is done basically with the movie, new clients will come in. So once the movie is released, new clients will come to know of these kind of studios and they will start coming in as a new clients for them. Now, what they've done recently, what are the triggers? Why I'm looking for this kind of a company? If I understood the visual effects part and it's like a mundane, maybe a commodity kind of activity which anybody can do. But what they have done recently is they have opened a new studio space in Mumbai, Hyderabad, and Chennai, and they want to accommodate more people. So as we see, they have kind of around 500 employees or artists only. And with this space, they are adding almost 250 more. And their plan is to take the number of employee strength to 2,000, 4 times of the current capacity. So that means they are visualizing something that they want to hire 2,000 people, maybe in 1 or 2 years or 3 years. But expanding a company 4 times just for the employees, you can imagine the kind of work that will be generated in this industry. So in September, they have shared this expansion part of it, where they're expanding on Mumbai, Hyderabad, and Chennai, and how many employees they will accommodate there. So in the very short term, they are trying to reach first 1,000 employees and then going to 2,000 employees actually. So that is a very big number, I feel, and that can only be possible when a management has a visibility of what work is going to come in which domain. Now they're targeting a significant contribution, if you understand, on the OTT sector. Now you can clearly relate to your home itself how many people are relying on OTT for the content instead of TV. And they are trying to generate 50% of revenue from international operations where the margins are higher. So if I just take these two themes in India, expansion of OTT sector and the international operations where every movie has more VFX content, then my job is mostly done in the terms of tailwind. Okay. Now, if we go to the reports, does it collaborate with the reports from the industries? Yes, we see that this industry is expected to grow by almost 11% CAGR across the world. And in India, is it better or lower? In India, it is expected to grow by 30%. Industry itself is growing by 30%. Most of the stocks that we discussed, or most of the companies that we discussed, that industry is growing by a CAGR of 7 to 8% to 11%. This industry, as per the industry reports, this sector of visual effects is going to grow by 30% as an industry. Now, the companies who will do well, they will grow in par with this number. Some of the companies will grow more than this number also. Now, we have to be very, very careful in choosing those companies. As we see, with the advent of 5G, with the advent of 4G in the recent years, and 5G is coming up, the usage of digital video streaming platforms plus high quality content is increasing. And that has positioned visual effects as an integral part of it, because a lot of these platforms will also start using VFX to attract you as an audience there. Now, media and entertainment sector is also expected to grow very fast in different domains like digital, gaming, television, automation, and VFX. In that sector itself, if we see, animation and VFX is expected to grow by almost 29%. Last event, we have considered one of the industry where live events we have covered. If you remember, the name of the company was Exicon Events. So there are live events and those kind of advertising things, those are also growing very well actually. And in the same space, I am seeing that animation and VFX is almost at 30%. Now, expansion of OTT is one part of it. What is the supporting ecosystem? Supporting ecosystem is the smart devices you have. Smartphones, HDTVs, laptops, tablets. These number of things are growing exponentially in everybody's home. And if you relate to it, are you subscribed to any video streaming services? Most of the people would say yes here. So if the things are expanding and if the ecosystem is enabling that, what is the cost of making those things? Now VFX helps to reduce that cost and makes it a little bit faster also. So it will keep the things in schedule for those kind of companies. So what are the OTT companies that we have in India? Netflix, you have Disney Hotstar, you have Amazon Prime, kind of a thing. So this company has all the tie-ups with Netflix, Amazon, and Disney also. So when you have a company which has tie-ups with all the bigger OTT space in India, and they have done the work for them. That means something is going as a tailwind for that company, something they are doing specialized, which make those companies come back to Phantom. Okay. Now, ecosystem mein, do you see the low data charges, which is also helping? So you have smartphones, HDTVs, but at the same time, the data charges are very small. So that means you are hooked up. Even in tier 2, tier 3 cities, a lot of people are hooked up on the phone. And they are just watching the things on the phone itself. Now, from the government, what is happening? To promote this, and they want to create almost 20 lakh jobs, they have a task force on this industry, on animation, visual effects, gaming, comics, and so basically extended reality. So recommendations of this task force is also coming in the near future, and you will see this industry will start gaining prominence. Now, tailwinds, one part we have seen in the earlier part, but if you see, I will come down a little bit here. Lot of other studios, even Shilpa Shetty, BB Pictures, Phantom, Illusion, Reliance Animation, Paperboard Design. What they're trying to do is they have figured out this theme as a bigger tailwind, and they are all started expanding beautifully. So it's just not about one company in that domain, it's the industry which is expanding like anything. Maybe we are in the very infancy stage. We don't know. Maybe we are at, if we take the lifespan of a man, and we might be at a 4 or 5 years journey, maybe here, and still 50 years journey still left. Maybe I am looking from this kind of companies from that angle itself. Okay, and a lot of companies, what they're trying to do, the number of shots in the single movie. If you see Brahmastra, 4,500 shots in single movie. And it is recognized only because of visual effects only. RRR gained the awards, right, recently, 2,800. Shamsera, 3,200. So as we go from the last few years and coming towards the recent history, we are seeing that the number of shots are increasing per movie. Number of shots increasing per movie, and the amount of budget for each film, there is a 100% increase in that budget also. So we are seeing the movies which are built at a cost of 100 crore or more, which we cannot visualize maybe 6-7 years back. Now, number of movies in 2022 over 2021 is expanded by 100%. And last year also, we had good number of movies which has seen this budget kind of a thing. So bigger space, budgets are increasing, number of shots are also increasing. And now studios are adapting to, they're open to adapt this kind of a thing. So now they might be using some kind of a machine learning and artificial intelligence into their softwares when they're trying to build something on the visual effects. So one of the common risks that is prevalent across the market is artificial intelligence. Everybody is okay. Artificial intelligence will impact this kind of a company. This is a user of that. These companies are user of that software actually. If artificial intelligence develops more and some tool is there, these companies will adapt that tool itself. You just imagine you are using a Adobe Reader at your place and Adobe Reader improves. Do you download the new version or do you say ki Adobe has taken my job that way? So people start using the better software actually. So these companies are, since they're daily using those AI softwares, machine learning things, the moment something new comes up in the market, they will be more adaptable to use it in their work. At the same time, they will be able to figure out what work can be automated through these tools. So that means in the future, they might need less number of people and they could be doing high quality job with that. So that means any manual work they can remove with the use of these tools of machine learning and artificial intelligence. And their production times become faster. Whatever they're doing manually, and it might be taking a week, with the advent of these tools, and if they're able to adapt, they will be able to use it within a 1 day and give you the shots basically. The other advantage that companies or the movies production houses will get is the shot can be reconstructed. With an actor, you have to call him again, schedule the space again, you go to a specific location and do it. But here, if you don't like the shot, you can reconstruct it. Of course, there is a cost, but it is possible to do it faster as compared to a normal movie scene. So that is my thoughts on machine learning and artificial intelligence. Now, if you see 50 plus movies that I got this information from the industry media reports itself. Almost 50 plus VFX heavy movies are expected to release in these 2 years. And 1,000 plus original titles are expected to release on top OTT platforms. Just imagine the kind of content which people are consuming, which the industry is able to see, okay, this is the amount of content which is required. So that means huge amount of workload is coming to the industry. And that's what I think Phantom and other studios have realized, and they're expanding their headcount by 3-4 times. They might have realized this part already with these industry reports. Now, what is the cost of operation? For doing a job in India, it requires only 1/8 of the cost as compared to UK or North America. You can imagine this industry as an industry which is like Infosys, TCS in 1998, 2000, 2002. It's a kind of a IT service they are doing, right? TCS, Infosys to the US clients. Imagine that kind of a model for these kind of companies doing the services kind of a work in VFX domain for US, UK clients. And there are a lot of other domestic clients as well. So that industry is into that nascent stage or infancy stage, I believe. And with the advent of the things, they can just go bigger and bigger, the kind of 30% growth they are looking for. Now, the amount of jobs they have created, significant, and that is going to increase. In 2022, 5 global VFX players, ILM is one of the biggest, they have started operations or announced their entry into the Indian market. So they have figured out India is a place where the cheaper labor is available. And Phantom is part of that ecosystem. So they are into the right space, I think, with the right industry tailwinds as well. Now, on the awards or the orders, they have received a very good contract for 62.5 million for international movie. That is what is their target, to increase their international presence. At the same time, they have also received work order from Netflix. That order is 120 CR over 4 years. So a company like Netflix, which is a kind of a leader in OTT domain, is trusting Phantom for 4 years. Forget about 120. Focus on 4 years. Why they want to work with Phantom for 4 years? Something they have found good enough that they can trust this company for 4 years. Okay. And then this order will keep on increasing in the 4 years. Currently, they started with maybe 120 crores. By the time 4 years happens, it might be doubled by that time. Now, total order book for the company around May 23 was around 200, and 100 crores was expected to be executed by financial year 24. 50 crore more order in January 24 from KGR Studios after the recent success of movie ILM. So this is a movie which has just got released in January 12th. They have taken the distribution rights. They have spent 17 crore for that movie. Basically, they co-produced the movie because this movie got stuck in with the production houses for long because the funds were dying up. And this company, realized my money is not going to come and I have to pitch in. So they have pitched in with 17 crore rupees and they got the distribution right of this movie. Now, if this movie had failed, they would have been a kind of a disaster for this kind of a company. But this movie got released on 12th January and already accumulated close to 80 CR in India and across the world. Not only they have got this money back successfully with their mindset, plus they have got some profits out of it as well. So one of the other concern that people might have initially was the kind of trade receivables. Yes, this industry would have trade receivables, lot of trade receivables. But The moment the movie get released, lot of money will flow back. So it's a kind of a little bit lumpy business in the terms of the payment schedules may be staggered over the movie production. So you create 10 shots, you supply it to the production houses, get that money for 10 shots. But it will be only in parts. So until the final production is ready, they will get that money as a lump sum at that point of a time. So that means the trade receivables may be higher over the 6 months or 9 months period, and then suddenly it could be lumpy amount they will be getting back. So KGR Studios was behind movie Island, and they have come back because of the recent success of the movie. They have come back and given them 50 crore order. That's the kind of work they are doing, and they are getting the repeat clientele from the companies which are well known for this. Now, this movie is into the Telugu and Tamil side. This is going to be replicated in the other domains, Hindi as well. They are planning to do it. So that means that 80 crore can easily go to 100 crore for this kind of a movie. And there are a lot of visual effects that has been done in ILM. So just go and watch the trailer of ILM, and many people have gone, and I have checked with the people who have gone into the to see this movie. I've done this kind of a scuttlebutt. Even after 2 weeks, people are happy. Okay, yes, my children are happy, and they love to go to ILN movie, and there could be ILN 2 is coming, for which KGR Studio has given this 50 crore order. So that means something as a brand which is building up for that. Now, that was on the Netflix and the KGR Studios. They are also approved by Amazon. They are also approved by Walt Disney. They are also approved by DNG, one of the world's leading kind of a studio for feature film. So this company is outsourcing most of its work to Phantom. So this is, I think, is taken by Prime Focus. Prime Focus is a listed entity, and most of the commodity work will flow from the movie houses to DNG in India, and DNG is outsourcing it to Phantom back. So we have well-renowned names from international side, and plus we have the biggest listing house from India also giving it as a outsourcing work. And then we go to the website and see the openings are there basically, and it keeps on coming. Even in January there was some, even in December something was there. So that means they keep on hiring people, and it consistently relate to what is their target of achieving 1,000 employees in their payroll. So that is also being there. And recently what they have done, they have raised a QIP with 80 crore rupees. And fund houses are able to subscribe to it at 412 rupees per share. One part is this. What caught my eye is expansion in gaming and animation space. This is what they need the funds for. So they have given the reasoning behind that, why they want that capital. They are expanding the capacity in existing studios, developing the new technologies, or maybe adopting the AI or something, and embarking the new journey in gaming and animation space. Now, gaming and animation space is one of the biggest space where one game or one animation can change your fortunes. It could be kind of 100 beggar in that domain. So that is the kind of money they spend in the gaming and animation side. So if they are trying to venture in that space, it is going to be definitely helpful, I believe, with the kind of capabilities they have. And this is on the number of shots for Ireland is again 4,500. And this snapshot I have taken on 17th. By that time itself, in 5 days, it has crossed 50 plus crores. Now they have all the best awards from the industry. TPN certified is one of the best award. Certified basically certification, where once the company is certified with TPN, lot of work will flow to that company. Okay, so that is a kind of a data secure ecosystem. So they are guaranteeing that kind of a thing with the highest standards. Coming to the financials, we see that company has grown from like 10 crores business to 58 crore in last financial year. And this year target is almost 100 crore. Now on the net profit side, they have grown from 0 to 18 crores. So company is on the right path, growing almost 100% a year, 80 to 100% a year. Now, what management says for financial year 24, again, they are expected to grow by 75 to 80% with the kind of order book they have, and EBITDA margins, they are saying roughly between 33 to 35%. So that is a very good number. And if you see the June results, they were walking the talk. September results, little bit out of blue because of the industry strike in US. And that is one of the key risks that I will cover in the downside. But overall, that's what management is guiding and looks on track. So if I see the movie Ireland Success, that money will start flowing to the bottom line sometime in financial year 24 or maybe Q1 of financial year 25. We need to see at what point it will come to the bottom line. And then I think what they are saying makes sense. Now, on the shareholding pattern, we see that almost 55% is with promoters and 15% with FIA and DIIs, and public is only holding 29%. So sufficient skin in the game, as per me. And FIAs or DIIs are also believing in them at price of 412 rupees. Management guidance is almost 100 crore with bottom line of 20 to 27 crores. I'm not giving a very high PE ratio. Let's say I'm giving 20 PE ratio with 20 EPS. So that is the bottom line. I think we are there already. But if EPS expand to 23 maybe, and on the very optimistic side, people think, okay, 50 is the PE which we can give for a company which is growing at 75-80% year on year for next 2-3 years. Then possibly we might be looking at a price range of maybe 1,000 plus. So that means overall, if we consider this range, we are very close to the low valuations for this kind of a company. So my first buy was not here. I started around 170, 180 rupees, and then I built it over years. But my major money I have poured into this company is around these levels only, between 400 to 500 only. So technicals, few months back were very promising, and it was looking kind of a flagpole pattern at that point of time. And then it becomes a little bit bearish pattern, and it broke down as well, but survived on 5th December. And then recently, if I go on a monthly charts, it gives me a little bit better clarity on, okay, it has gone down after listing and then came up, made the new highs, and then come back and retested the support zone or the demand zone. And then on the monthly basis, it is just trying to hold on to that. Now, if I see the volumes here, yes, definitely something is going on in this industry where people are interested. So on the risk side, as we see, a lot of employees they are trying to add. So increasing the assets, studios, and employees, this can turn out to be a problem if right orders are not in place, or if they're not getting the futures order as per the expectations. Increase in the trade receivables that we have to monitor very closely. Now, their whole thing is about the good VFX shots. Just 1 or 2 bad reviews, and it can lead to a downfall of a company faster than we can imagine actually. Clients are coming because of work quality, and if public is really bashing that company for bad VFX effects, that leads to a downfall because the future work may be impacted directly there. Valuation wise, yes, company looks undervalued. But if again the orders did not come or the things don't flow as expected, then valuations may turn out to be a trap in this case. So we should not think about, okay, it's only undervalued. It could be a trap as well, looking at that point. Heavy dependence on export. So 40% is what they're trying to do international assignments, and they're trying to go towards 50%. Now, recent strike by the artist already has crippled the revenue in the second quarter. But this thing has already been sorted out. So I believe they will come back faster on this part. But this is a heavy reliance, and I think we need to keep track on, okay, how the work is getting impacted because of exports. Then risk of talent poaching. This industry is suffering very heavily because you need VFX artists, right? And those VFX artists are high in demand because a lot of studios are opening in India. So it's like TCS is there, Infosys is there, HCL is there, and then a lot of IT space companies are coming up as startups, offering higher value, right? So you can see that poaching happening in this industry. Despite that, they are able to retain the good talent over years. So, but this is the risk we cannot ignore. Again, there might be, okay, you can think of Netflix, they might open their own studio and try to hire all these people. The risk comes from where we cannot visualize very easily. So I think talent poaching is a big risk in this kind of industry. Now competition, yes, there are a lot of studios, but a lot of growing opportunities as well. Since these have survived so many years and they keep on getting repeat clientele, I think this risk is a little bit lower. Technology wise, yes, they are using the cutting edge technology, but that technology can change. Just like you think of, okay, artificial intelligence can impact the mundane work. So they have to keep up with it, and they might have to spend more money to procure those softwares. So sometimes if you're behind in one technology and then suddenly your competitor grabs your work. So technology obsolescence is one risk that they can think of. So on the timeline part, yes, so there could be a very heavy demand basically on the less turnaround time for a movie. And there it can lead to employee burnout and the decline in the quality of the work produced. So if the employees are burned out, they would not produce the right quality. So there, I think timeline issues with the or agreements with the production houses might lead to some kind of a risk into their business. So this is how I felt about Phantom basically. So there are a few other companies like Basilic and Digicore. They are also into the same domain. And the key difference which I found out is Basilic and Digicore are a little bit into more commoditized work, and Phantom is a little bit into more specialized work. But of course, they will also catch up. It's not like, okay, they will remain behind or they will not catch up with this kind of a company. But I think the industry itself is growing. The pond is so much bigger that it can absorb like 10, 20 good players into this industry over the next 10 years. So that's where either you bet on Basilic or Digicore or Phantom, but I think the industry is going to grow and you have to take your bet out of few available listed spaces. So that sums up my thesis basically on Phantom. So any questions or queries, I would be happy to answer.
Hi, Puneet. Rohit here. I'll just ask one question. Thank
Yeah.
you for this very insightful and new sector and new company. Just one question. I mean, with help of your research, have you, looked at any company in similar sector in, Western part of the world? Because I think they have been doing this thing for quite many years now. And if that shows to us that how such company long last, because as you mentioned, I mean, competition will kick in. And so how, and any insights you can, share on that front?
Yeah, so ILM is the biggest one there actually. And ILM has survived over 3 decades. So that means if the company is doing the right things, they will survive. And the space is big enough to survive for so many years. If I try to answer in terms of, okay, did I have a look into their financials or how they grab the projects? I did not do it for the Western side, but I see a lot of those houses are also moving their production to India itself. So they are kind of creating their base in India right now. So I think India is a space to look for, not Western side, because the cost of making in Western is also high. So possibly what they will do is they will come up and grab one of these companies and create it as a kind of a brand or a franchisee kind of a thing. That will happen, I think, in that space, maybe in 5 years down the line.
Okay, thanks, Puneet.
Thanks, have you seen Prime Focus in this?
Yeah, Prime Focus is not renowned well in the industry because of so many issues. If you see the amount of debt they have, amount of work they do in terms of commodity business, basically they are doing the mundane it's kind of a work which anybody can do basically. They have not really taken up their skills to the next level, because of which these companies are grabbing the big movies. It is not going to Prime Focus, right? And few years back, there was a big series, right? I am forgetting the name. They have given that leaked. Some employee has leaked the data to the before the release of that OTT serials from the Prime Focus, and that has really harmed their reputation at that point of time. That is something on the Ice Age or something, Age of Thrones. I don't remember what is the name of that serial, which has 3, 4 years, 6 years back has made enough headlines. But I came to know that Prime Focus was the only supplier of that in India, and somebody has leaked it before it has come to the OTT at that point of time. So they do not have a good reputation actually. Plus, they have a lot of debt, and they are more focused on the commodity side, not specialized side. So, and on top of that, one of their companies, DNEG, is already outsourcing the work back to Phantom only. So whatever they are also giving, they're also giving it to Phantom in the background.
So
So
DNEG is a part of Prime Focus.
yes,
Okay, sir. And to add on, as you said, it is expanding the way in gaming and animation. So recently, GTA Vice City, GTA 6 was launched. So to make that game, if I'm not wrong, it was like $2 billion were the cost to make that game. So it is a huge sector and it's growing gaming. So they do
yes,
have live events also. Like we have over here festivals like Sula Vineyard and Sunburn over here. So outside India, there are like huge live events and their gaming price and conducting that event is another game.
yes. So that's why they are trying to focus more also on the gaming and animation space as well. And I think animation is the space which is really lacking in India in terms of right movies through animation. And if you see Cars, the movies like Cars and those Ice Age, right? India is not nowhere right now. And if they focus, some company like this can focus on that space, I think we are in the interesting times ahead. So
Thank you, sir.
don't worry about in terms of okay whether it has run up or not. What I'm seeing that if the funds houses are able to put big money at 400 rupees plus the amount of valuation they are getting at this point of time, plus the kind of industry in which they are moving, which is growing at 30%. So huge space lies ahead. Just think of Infosys might be available very, very costly at 2000 in year 2000. But if somebody has invested it at that such high valuations also in Infosys in 2000, in 2020, you would be sitting at 100x kind of a thing only.
And the
So
run up is not that high, sir. Just to add, and they have retraced 50%
yeah.
from their high.
So yeah, so it is individual's perception, right? What is high and what is low. What I believe is people knew about it. Okay, they need money and they are stuck in movie island, which is proved to be a success now. So one of the major hangover is gone and their money will be released there. And plus they have raised 80 crores as well. So a company which is doing a sales of almost 100 crores or 90 crores maybe in financial year 24, sitting on a cash of 100 crores as well. Imagine the kind of opportunities they might get out of it. So we might fail, but yes, if it succeeds, it will succeed like anything, even from this point.
Thank you, sir.
Yeah, Amar, you also have a question, right?
Yeah, Puneet, part of that has been covered in the risk where we talk about the technological factor, right? What I was kind of perceiving as an emerging threat is things AI is catching up very fast and it is improving leaps and bounds with
Yes.
each day. And I already have seen some of the AIs where you put in some stock photos, then give the theme and all, and they create a video generation of it.
Yes.
And they do a pretty decent job of it.
So who will do that?
Uh,
Do you think production houses will do themselves? Okay, a Shah Rukh Khan would sit and do kind of those kind of things. They will have a animation studio, right? Who is doing that work in the
true,
background,
true.
right? So for Shah Rukh Khan, it's Red Chillies Entertainment, which is doing that for their production house. Similarly, for the other movie houses, they will outsource this kind of work also. Whether AI, which AI to be used, let Phantom, Digicore, Basic Fly will decide that. What I'm saying is this company will start using those tools for making the things easier, faster, better.
True, true, true.
Can I say something?
Yes, yes, go ahead.
Can they? I wanted to ask is, can they create their own content as well?
So they don't want to move into production or direction to answer your question. They want to support the studios. Basically, they don't want to compete with them.
Okay.
Hi, Puneet.
Hi.
Yeah, go ahead.
Shall I go ahead?
Yes, yes, go ahead.
Yeah. I'm from this industry.
Okay.
Yeah. So past 15 years I'm there, and now I'm moved into gaming. And what I've seen is studios don't survive for a long time in this. Due to the work culture, due to the attrition rate is very high, and employees get burnt out a lot.
Yes.
And there are a lot of payment problems which I've seen.
Yeah. So that payment problems, I will tell you, a decade back, lot of payments are going towards the Mumbai movie industry, Bollywood, which are not well known for giving the money easily. Things have been changing in the last 4 or 5 years, where a lot of interaction has been directly happening with the right, like Netflix or Amazon, right? These kind of agreements has one clause where you don't release the last frames until you receive the money also. So I think with time, this payment problem will be resolved. And I think what you're telling me, that's what exactly the Prime Focus company has a problem with, which a lot of these may not have. But having said that, yes, it's a risk. I have covered that, of course, in my thesis also. We need to keep track of the trade receivables. So that is definitely a issue in this industry. But I hope this will be sorted out with the new age companies.
And every now and then there is another studio coming up which is ready to do it at a much cheaper rate.
Yes.
That
And
is
that's
gonna
where the repeat clientele and the strong client relationships will help. I think 45% is a decent number if they're getting the repeat work. For example, KGR Studios, right, with the movie of Success of Ireland, they can easily go to some other houses. Now, what they're doing here is they're creating a 3D character. For example, that Alan is a alien character, basically. So now you cannot replace that alien character, right? The studio has to come back to you only for that character if they want to make a sequel of that movie. So that's where they're a little bit specialized in terms of they are creating the high-end work, creating a character. You just think in that direction. Avenger is a character, right? Avenger movies. So if you have to use that, you have a copyright, you have a patent on that kind of a character. People have to come back to you if they want to make a sequel out of it. So Phantom is moving in that direction, as I understood. But still, I want to listen to you from that sector you are. So I want to listen more on the risk.
Yeah, I see outsourcing as a big risk because I've seen a lot of studios getting closed.
Yeah, so that consolidation is happening. And why they are getting close? Because they are doing the mundane work, commodity work.
No, I've seen the good studio like Rhythm and Use who are doing absolutely great work getting closed.
And what's the reason for that?
It was a payment issue.
Payment issue. Okay.
Yeah.
One more question on this. Say, for example, the Infosys, TCS, CTS, and all, it came very easy because of the English language. We actually had the expertise in India. But when it comes to animations, graphics, okay, it's more the visual represent. It's more like the visual representation. So, just thinking how easily it can move to other countries where the funding can go from here and then the work can be done from there.
So basically, artist, wherever you find it, it can move easily. But India has a lot of demographic advantage in that sense. Okay. And the cost is really low, 1/8 or 1/10, basically.
Oh, no, so, if a target Thailand or some other Philippines kind of countries, okay, it might work out still more cheaper, right?
Yes, it can definitely move there also. But looking at what the bigger studios have found out till now is a lot of those production houses are making up studios in India. So they might have figured that advantage at this point of time. Maybe 5 years down the line, 10 years down the line, it might move to a low cost country like Philippines as well.
Okay. Yeah, so, that's right.
But definitely, as we see that 1 quarter strike by US employees or the industry basically has impacted their revenue and the cash flows. So that part definitely we need to track in that terms, because this is something, if they don't have money, how they will do the business again? And their assets are increasing, employees are increasing. If the orders they are not getting back easily, then it could turn out to be a problem also. So it's a kind of a risk, but if it can work out, it will do well. Little bit challenging times, but I am betting my bet on this company.
Okay.
Puneet ji?
Yeah, go ahead.
Pankaj here.
Yeah, go ahead, Pankaj.
Puneet ji, the thing is that I discussed with this type of, the obstacle for expanding such a type of companies in India. So I had a discussion with Arpat Raj, who is their MD. So what he said, there are some, employee retention program, or they have given some substantial amount of shares to the key personnel who is heading those divisions and the key, principal engineers. So the chances of their moving from Phantom Digital to any other competitors, he feel that it's a bit difficult because they are maintaining that repo and they are maintaining that client retention employee retention program within the Phantom Digitals. So let's see, because time will tell, and we will come to know like what's happening around within that industry.
Yes.
But I believe that I believe this is either when in nascent stage, as you discussed, and as you tell, because we are hardly contributing only 5% of the demand which is there in outside of India. And one more thing, it's a creative VFX. It's not a normal VFX. So creativity is there in India. So a lot of talents are there. So foreign or Western companies always wanted to have somebody that these services can be outsourced from the India as their partner. So that's why we see this. Lot of companies are approving and coming back to the Phantom Digitals.
So yeah, that's what my thesis also is on similar lines. I believe that they might do well in the coming time.
Yeah.
Puneet, hi.
Thank you so much.
Yeah, Ritesh, I think you are speaking, right?
Yeah.
Yeah.
Just wanted to know any exposure on the virtual reality side as of now?
No, I don't think so.
Okay.
Okay. So yeah, I will keep the discussion till this point, and you can put in the chat.
One more question. I think everybody has talked.
Yeah, go ahead.
Competitor in Basilic Fly. Basically, they are not into the creative work, right? They are into the basic work, pre-production. So tomorrow is Basilic Fly, because they are also into the VFX and they know how to do everything. Also come to the post-production creative things. So they have end-to-end products, right? So
they will catch up. I said that they will catch up. A lot of competition will catch up, and we need to see how this company will cope up. This is very infant stage at this point of time. We need to see how the management comes up with the right product, comes up with the right mindset to tackle the competition. All things we need to see as it grows, this industry grows.
Right. Okay, fine. Okay, thanks, P.T.
Yeah. So yeah, I will take further questions in the chat maybe, and we'll move to the next one. You can put your questions further in the chat. I will answer there directly.
Punitji, just before we go to the conclusion, what is the minimum order size and a maximum order size that these type of companies take typically? I believe we discussed this 4-5 months back on this subject.
Most of the time they were getting orders in terms of 6, 7, 8, 10 crores.
Okay.
Okay. Now recently they have started getting orders of 50 crore, 100 crore.
Okay.
That is the change what I am seeing right now.
Because as we discussed, one day you said like maybe 10 lakh or 20 lakh one shot or something like that.
Yes, correct.
Might be there, right? So that's why I asked this question. Yeah.
So a lot of Indian companies budget would be like they make a movie for 20 crores maybe, right? Hindi movie.
Yes. Yeah.
So 10% of that is only 2 crores.
Okay.
So generally their order size would be 2, 3, 5, 10 crores maybe max. But now they started getting order of 50 crores itself. So that is the change. Okay, so yeah, I think we'll move to Salesh. Salesh, you are able to hear me?
Yes, Puneet.
Okay, so I have stopped sharing. You can start your one. And other guys can put a question to me in the chat. I will try to answer them.
Puneet, have you enabled that sharing?
Yes. Check.
Yeah, I got it. So are you able to see the screen, everyone?
Yes, we are able to see.
So thank you, Puneet, for this wonderful presentation and for giving me this opportunity to speak on this, speak in this Alpha Learners Day. So I'll start with, so my company that I'm presenting is Bansali Engineering Polymers Limited. So all the participants, I would like you to, see around all the appliances that we have, or maybe all the two-wheelers or four-wheelers that we have, and you try to imagine in a two-wheeler, you try to imagine the mirror casing, the mirror housing, or the footrest, or the mudguard, or the everything that we say, like, okay, it is a fiber body. And in our houses, if you see the appliances, like air conditioner body, if you see, if the cooler body, if you see, or maybe refrigerator handles, TV casings, whatever it is there. So all of these things, these are made up of thermoplastics that we say, right? So thermoplastics. So ABS is a type of raw material for these for all these items. And this company, this is the lowest cost manufacturer of ABS. Yeah. So, and this the company, they have been incorporated since 1984-85. Yeah. So I'll give you a rough timeline of this company. So they have started in 1984-85. They have been listed on the stock exchange since 1985-86, and then in 86-87 they are tied up with Sumitomo, a Japanese company, for the production of this Abstron, that ABS polymer. And then they started, the capacity expansion happened, 5 kiloton per annum. Then they established a new plant, then 27 kiloton per annum. And after that, so all this production expansion happened in all those things, all those years. Their managing director, Mr. B.M. Bansali, had received an award for excellence from IES, that is a body, economic body. And in 2013-14, they had tied up with Nippon A&L Inc. So that is a Japanese company. So all the technical expertise, all the sales support, that is provided by this company, Nippon A&L Inc. Yeah. And after that, they expanded in 2015-16 to 80 kiloton per annum. And in 17-18, they become the highest producer of ABS in India. And they established the R&D center in 2018-19 in Abu Road, that is in Rajasthan. And so currently, what they are planning is, they have planned a capex for enhancing the ABS production from 145 to 145,000 ton per annum, and that has been scheduled to be finished till March 2026. Okay, so this is just a brief timeline of it. So we'll start with what are the products that they manufacture now. So the first product is ABS. So ABS consists of mainly these three polymers. So first is acrylonitrile, second is butadiene, and third is styrene. So in this ABS, the acrylonitrile, the A part and the S part, these parts are imported, and these are derivatives of crude oil. So these are import dependent and the forex exchange dependent. These both the parts are, and the butadiene part, that we can get in India itself, but it is around only 15% of the total ABS ratio. So that comes to a only minimum part of it. So I'll say the ABS, this company has the second largest market share in India. And so why are we using this product? So basically, as you know, like all the vehicles that we have, the main thing is the durability, the impact resistance. The vehicle, it can withstand any minor accidents or something like that. It is able to take the load or the impact of whatever pressure that we put on it. And this material, this polymer ABS, it is highly processable, and it can be manufactured in various colors. And next thing is, there are three different categories. Yeah. So this ABS, it is manufactured by different processes. So one is by injection molding. So injection molding means using a very narrow space, you inject this material, and at higher temperature, you pressurize it, and whatever mold it is there, it will take its shape, take the shape of it. And the second one is extrusion. Extrusion is also heat. Using heat, you pass the material, pressurize it, and then the shape, you can mold the shape in whatever form you need it. And the third is blow molding. Blow molding in the sense, like bottles, how the bottles are made. You from inside, you blow up the air, and whatever shape the mold is made up of, so that shape it will take up of. So ABS, this product, this company has 92.58% of the product, the revenue that it gets from is from ABS. Key applications, as we discussed in the starting, is from automotive, appliances. The packaging items also are made up of ABS. All the electronics the hardware component. So that are also made up of ABS. In the healthcare industry also, all the monitor screens that are there that you see. So those equipments, the body that is made up of ABS, and in electrical also same. So whatever monitors you have, you see the body, the covering of it, casing, as you say. So that is also made up of ABS. So that is the first and the major USP of this company, that the main product that it sells, that is known for. Second product that it sells is ASA, which stands for acrylonitrile, styrene, and acrylate. So this is just another variant of those whatever polymers that we are using. So this one is more weather friendly resin is there. It is a heat resistant. It has, so you can get unpainted exterior application. So it can in the material only we can add the color. So there is no need of coating from the top. So the material itself can absorb various colors, and it can get the finishes that we desire, the color that we desire. And this has excellent UV resistance. So you see the car front, as you are seeing, the radiation grills that are there. So that can be made up of this ASA. The logos, so the logo that is for electroplating. So whatever electroplating also application, if it is there, that can be also done by using this ABS and ASA, and the mirror casing, as we discussed. The third product that they manufacture is PCABS. PC stands for polycarbonate. So for all the industrial thermoplastics, it has excellent strength, excellent heat resistances. It is used in automotive and electrical applications. So one of the other applications is also like suitcases, whatever the trolley bags that we have, the alloy wheels that is there in the cars that we are seeing, all the tires that we see. So that all is made up of this ABS or or some derivatives of ABS. So these are the first three products. Two more products that are so the fourth product is specialties. So there are multiple derivatives of ABS, from 20, 25, 30 derivatives of ABS that are there, and for various small uses. So if some customer wants some low gloss material and he doesn't want it to be like painted or coated, the materials should have that inherent property to have that shine or glow. So that can be given by a variant or a derivative of ABS. So a low gloss or high gloss, or maybe a metallic effect if someone wants, or a pearl effect if someone is looking for in any type of this fiber body. So that can be attained by this one type of like non-painting ABS. A functional ABS means if you want some anti-scratch property, anti-friction property. So that kind of thing can also be achieved by a functional ABS. So this is a different derivative of ABS. Yeah, and third is like one is impact modifier, and the fourth one is like reinforced glass field. So you want to have some strength in the glass, like the glass front things. So we can add some part like some additive in the ABS, and we can modify it to attain a higher strength thing. And the fifth major thing is sand. So this is also very popular product. So where the client is looking for transparent applications, such as you can see here, all the stationaries that we are seeing, or any whatever the transparent, there is like visibility. If you want a clean like transparent look, so those kind of applications can be used made by this material, SAN, styrene acrylonitrile. Okay, and so this accounts for 1.74% of the turnover of this company. So these are two major products. First one is the ABS, and the second is SAN, and the rest are like 4-5% remaining, like specialties and polycarbonate ABS. So these are like 5 major products that the company has. And if we look for application, so you just imagine sitting in the vehicle, your 4-wheeler or 2-wheeler. So whatever you see, from the air vents to the glove box to the seat consoles to the door panels, and in 2-wheeler, if you see the tail lamp housing, the mirror housing, side covers, glove compartment, nose cover, everything that you can imagine. So what happened earlier, all these things used to be made by metal, but later, as people wanted to improve the efficiency so that the vehicle weight is less, so they started moving to these different products, these thermoplastics, so that they can get similar amount of strength with lesser weight, so that the efficiency or the mileage, as we say, of the automotive these vehicles, they increase. So that's these are the major applications in automotive part. And in appliances, as you can see, like from TV frames to cooler body, AC body, to the frontal outer casing of our laptops, or these, as you can say, these toys. So all these toys also that you can imagine, these are also made up of some general purpose ABS. And whatever, so all these applications that you're seeing on screen, all these things are made up of ABS. So this is like a major part of our like housing, or you can say our automotives, these products. Yeah, so let's move to the financial parameters of this company. So as you can see, the market cap of this company is 2,700 crores. The share price is 109 rupees. This we'll see while technical analysis. The company has a stock PE of 18. Return on capital employed is roughly 19%. And the ROE is 13%. Face value is 1 rupees. The PEG ratio is also like 2.91, which is slightly higher than its peers that we'll see in the future. The company has zero debt, zero promoter pledge. And so we'll see the financial parameters of this company. So sales, if we see, so the sales, like since 2012, the company started with 400 crores around. But as we saw in the milestone section, that the company had done some expansion. So in 17, 18, their sales increased. Plus also, like the one major thing that I'd like to tell you about is the company has the raw materials are dependent on import directly. So as you'll see here in the material cost part, so in the initial years, of the total expenses, 80%, around 80% is the material cost. But during the high performance years, like when the crude price decreases, the material cost goes down to 72%, and that gives the profit that, and then the operating profit of the company, or the profit after that, then the profit margins of the company increases. So it is heavily dependent on the crude oil import or crude oil prices, as we say, and also the forex fluctuations. So during COVID, if you will see, so during COVID, like 2019-20, just before COVID, the price, like roughly average, if you see, the material cost is around 80% when the markets are stable. But as we know, during March, the crude oil prices, like they tanked like anything. So at that time, so they got all these raw materials at a very cheaper price. So these 2021, 2022, you will see the material cost was 50%. So they had excellent 2021 and 2022. They had around 400, if you'll see, 450 crores of profit in these years. So that is why you'll see that they have a surplus of cash, and they have zero debt and all those things. But now in 2023, 2022, 23, we'll see the crude oil price is stabilizing. It is coming up. So the material cost has gone up from 54% to 72%. And now maybe it will stabilize in 70 or 80% range. So we can expect the margin to like the operating profit margin to remain stable around this price. So but what the main point in taking this company is, so if you want to explore this space, so this because this is an I'll discuss these things in SWOT analysis. So yeah, so these are the major things that you saw in the net profit. If you'll see, the profit in the earlier years were 1 to 5 crores, 70, the single digit profit, then 2-digit profit. 2018, it went up to 154 when the crude oil prices were down. And after that, after COVID, it had gone up to around, as we are seeing, net profit 300 crores, 350 crores. And now in 2022-23, it has come to 136 crores. Now, so I'll discuss the sector SWOT analysis I'll do. So yeah, the strength of the company, that it's the second largest manufacturer of ABS in India. The first being one more company by the name of Styrenix. We'll discuss in the peer comparison slide about more about that. And the company for technical, expertise and sales support, they have a JV with Nippon AL, which gives technical and sales support. And also they have their R&D center in Abu Road, where they develop all these new products. So, and they invest significant amount of their cash, like around 2.2 crores they invested in 2022-21, and around 1.5 crores they invested in 2021-22 in R&D to develop new products, because there are various new age applications coming for these products, and so they want to keep up with the demands of the market. So that is why they are investing in the R&D significantly. And capex under execution, yeah. So they have done a capex. They are planning a capex for increasing the capacity. So currently they have a capacity of 75,000 kiloton per annum, and they want to increase it to 1,45,000 kiloton per annum. and that they are planning to do by the surplus cash they have of 250 crores they will be investing, and they are planning to execute this project by September 2025 or very positively by March 2026. And the company has zero debt, zero promoter pledging. The promoters are very experienced because they started in 1984-85. Now the second generation of promoters, they have also entered into the business, and they are also learning the ropes of the business. So this is the strength of the company. The weakness, as we discussed, is there is no control over the raw material prices. It can go up to 85%, 90% also, and sometimes it can go up to, like, if the raw material prices like goes down. See, after buying the raw material, the market the raw material price decreases significantly, then they cannot do anything, but they have to reduce the price, and then the margins will be hampered, and they also have to sell in loss. So they have zero control over the raw material prices. And as we saw in the previous slide, the business is overall cyclical nature. Sometimes as the crude oil cycle is there, so when the crude oil prices are low, the margins for them will be higher, and when the crude oil prices are higher or maybe stable, their margins are slightly lower or significantly as compared to when the crude oil prices are higher. And they cannot pass on the higher raw material prices to the customers. These are the weaknesses of this business that they are in. And opportunities. So opportunities, as we see, the market, the ABS market, it is expected to grow at the CAGR of 7 to 9%, conservatively, that they are saying. But with new market consumptions that are coming up, new applications that are coming up, and as we know that the two-wheeler market, the four-wheeler market, the EV market, everything is growing. So all of these require, as we know, these ABS materials. So this market is expected to grow. And currently, as per the reports, the consumption of ABS in India is around 250,000 tons, and the indigenous producers like Styrenix and our BEPL, Bhansali Engineering Polymers Limited, they are able to only cater to 75% of the ABS demand. Rest 25% is catered by the imports, cheaper imports from China or maybe Korea, South Korea. So that is why there is a huge scope for these ABS products, ABS and SAN to for them. And also, like, they have not even started with the exports because they are not able to sell in even satisfy the demands of their local customers. So they have not even explored the export part of the business yet. And as like rising population, like in our homes also, we have 2 two-wheelers, 3 two-wheelers, 1 or 2 four-wheelers. So the rising population, the rising consumerism, urbanization. So all these things are opportunities for like as a consumption play, as we say. So various industries, automotive, construction sectors, value-added products are there in various applications that can help increase profit margins. And one more application that I've not written here is that I came across is 3D printing. So this ABS is used in 3D printing. So whatever we like what material they are using for 3D printing is ABS, because it can be highly like moldable, and different shapes we can create as you are imagining sitting in your automotive screen, all the air vents, the glove box. So different shapes it can take, and it is able to maintain that strength. So that is one of the like properties of this material that makes it like very valuable in different applications as well. The threats that are there is sales independent on the performance of the other sectors. So if the auto sector, if that they are performing well, because they cater to like 30-35% of the sales comes from auto sector, and similarly 30-35 comes around from appliances. So if these two sectors are like slightly, if the market is cooling down or something like this, their industry is cooling down, so this will of course like reduce the demand for this material. And so this is one of the like threats that can be there. Foreign exchange fluctuations, like if any, from wherever they are importing, they have not whatever they are importing the raw material from, so that risk is there if any foreign exchange fluctuation is there, or if crude oil material prices rises due to some war or any other thing. So in short term, the crude oil prices can impact due to if any global scenario changes or something like that, and cheap imports. So these are definitely some of the threats that are there in this segment. Yeah. So I'll just touch upon the shareholding pattern also for this company. So the promoters, they hold like around 57.48% of the company. In this last year itself, they have increased around like 0.75% of sorry, around 1%, 1.5% of percentage they have increased in promoter holding, and FIS and DIS they hold negligible amount in it, and public is the rest. Public shareholding, as you'll see, it has slightly gone down from 43.56% to 41%. So yeah, the promoter holding is slightly increasing and the public holding is slightly decreasing. FIS and DIS have not shown much interest in this stock till now. And the reason for that could be maybe because this business is cyclical in nature, or yeah, or maybe this is smaller company, so that can be one of the couple of reasons. For other reasons, maybe like Punit Bhai can discuss. We and Punit Bhai can discuss after this, after the presentation, what the reason is for FIS and DIS not investing. Yeah, so risk associated, as we discussed in the SWOT also. No pricing power with the customers. The margins can get hampered on forex fluctuations and raw material imports, and the higher valuations. Yeah, so currently, as we see, the market is at higher, all the stocks are at higher valuations. So that can also be one of the reasons key for currently maybe the price or the market is very highly valuing these stocks. Stock is cyclical in nature, and it is currently trading close to the PE median value of 21.9. In the past, in 2018 or maybe 2014-15, the stock had gone to around 60 PE also. So looking at that thing, we can say that once the capex profits kicking or capex revenue kicks in, the stock can definitely grow like multiple times from here also. And expansion outlook, as I told you, so capex of 250 crores to increase the ABS production from 75 kiloton per annum, that is the current production, to 145 kiloton per annum, to be executed by March 2026. So the company currently has manufacturing facilities in Abu Road, Rajasthan, and Satnur, Madhya Pradesh. So these two places, they are combined, increasing the capacity to make it to 145 kiloton per annum. So that like around they'll be doubling the top line for this, and all the capex is done by internal accruals, and sales is projected to be around like 2,500 to 3,000 crores from the current of course like 1,300 or 1,400 crores, which is current sales. And PAT will be like if the margins remains the same, if we assume the margins to remain same, then the profit of tax will be around 270 crores from the current of 136 crores. Yeah, so peer comparisons. Currently, there is only one peer for one competitor for this company, that is Styrenix Performance Limited, and that is a very old company. They had earlier, so their company has a long history. So they had a tie-up with BASFs and Ineos Styrenix solutions, and then in last year only, I think they like if you'll have to read up on it. There was some. One sec, I'll just show you guys about that. Yeah.
Yes, sir.
So yeah. So okay, that page I'm not able to see now. So what happened was, so the previous promoters, what they did was they gave a dividend of around 80 rupees on a share price of 864 rupees. The share price doubled, so it gone up from 800 to around 1,600, 1,700 rupees. And after that, the previous promoters, they offloaded the shares. So it went down again. 2-3 days lower circuit it happened, and then these new promoters, then they brought this share from open market at around 600 rupees. So there was some shady dealing happening in this stock. So that is why, like, I have not gone with Styrenix Performance, which is the largest producer of ABS currently in India. But once Bhansali does the capex cycle kicks in, they'll be at par with this company. And the other so yeah, Styrenix Performance, they has a capacity of 1,45,000, as you're seeing in the second point, and they are the largest manufacturer of ABS. But once BEPL has the capex kick in, they both will have same production capacity of ABS. And the third is Supreme Petro, which is a company which is into multiple fields, but they have given they have told that they'll be doing a KPS for production of mass ABS of 1,40,000 TPA, but that will be in two phases. So first is of 70,000 TPA that they are planning to like go live by third quarter of FY25, and the second phase in fourth quarter FY26. And for that, they have entered into a technical license with MS Versailles of Italy for production with a low carbon footprint. Yeah. So if you see at the bottom, the comparison between Bhansali and Styrenix, the market cap of both the companies is around same. The debt, Styrenix has some 32 crores debt, but our company, the Bhansali, has zero debt. The PE is roughly the same for both these companies. And the sales, Styrenix sales is double. As you see, the production they have is currently double as that of Bhansali. Operating profit margin is around same only. It's Styrenix has some debottlenecking to do that they have told in their con calls that their production, their capacity utilization is around 60-65%. And for Bhansali Engineering Polymer Limited, their capacity utilization is around 96-97%. So they have attained full capacity utilization. So that is why Bhansali is doing capacity expansion. And PAT for both the companies around 145-160 CRs. And the Styrenix, the competitor Styrenix, they are giving a higher dividend yield of around 7%. And they have pledged. So the pledging part, if you see the competitor Styrenix, they are pledged around 100% of their shares. And they told that they'll be in their con call last quarter, they have told that they'll be de-pledging these shares, but they have planned it, but when they will be doing, they have not yet confirmed it. So that is these are some of the issues that I've seen in Styrenix performance. And I thought if you want to play this ABS cycle, then Bhansali is the best bet amongst these, because they are concretely like doing the expansion plan, and they are at least clear with all their numbers and everything. So yeah, current ratio is the current ratio. So that is why maybe the current ratio of our company, the valuation of our company is slightly higher as compared to Styrenix performance, and the assets of both the company is same. So this is about the peer comparison. Now I'll go to the technical chart. If you'll see, so monthly chart, if you'll see, the currently the share is trading at around 109 rupees. It forms a cup and handle on the monthly timeline. So once this 109, 110, this breaks the all-time high, then once the capex kicks in, or maybe the people are confident that everything is moving as per promised, because on like 10 days back, the company has come up with a circular that they have given a work order to Toyo Engineering for feed front-end engineering expansion, engineering design, front-end engineering design, and cost estimation to Toyo. So they are moving ahead with it, and they are showing that capex and all we are planning, and we are investing in that. The rest, Styrenix is also told in the past that they'll be doing the capex thing, but they have nothing concrete. They have planned accordingly, like they have done no action on their talks till date. So once the capex kicks in, we can see the share price can go if we take it because since it will be a newer area, so around 220 rupees for 1.6 if we say for Fibonacci, or maybe it can go higher also till 320, 340 range also. So this is the monthly chart of it. And daily, if we see, we can see there's some sort of flag and pole pattern that has broken out. And after that, the share price is breaking out, whatever the breakout candles are there that are with larger volumes. And after that, there's some cooling down that is happening. So as we are seeing, like once 120 high is crossed, and maybe on weekly, monthly basis, it closes above that. So we can see a good run up in this stock in the coming months. And I also did some slight analysis on crude oil prices, because as we know that it is heavily dependent, the performance of the business of BEPL or maybe Styrenix, they are heavily dependent on the crude oil futures. So I have a small chart I prepared for. So on weekly, as you see, the share price is stable for some time, it seems, and it will be hovering in this range. So if the share price is stable, we can definitely assume that the business will remain stable for the like couple of quarters or maybe 1 or 2 years as per this. So this is from my side. I'm open to any questions if you have, or maybe Puneet bhai, if you want to, I'd love to have your input on this presentation, small presentation that I made.
Oh, that's an excellent presentation. So don't worry about FIs or DIs coming or not coming.
Okay.
So don't worry. So they can be late always. So I have seen stocks where I have done 10x and then people come. So
Okay.
don't worry about that part. So otherwise, very concise and excellent presentation. That's how I can think of.
Any questions from anyone?
Yeah, who are the customers? Like any name of the customers you can say?
Yeah, so
We
they
saw
don't give
many.
yeah. So they don't give the name of the customers, but from news and all, you can guess that they might be TVS or Hero or Hyundai, all these big names that are there in like two-wheeler or four-wheeler segment that are there. But in their presentation, they don't give the name of the customers.
Okay.
Yeah.
Some car cycles, it's a cyclical stock.
Yeah.
All the stock price has traded.
Daily chart you want to see?
No, no.
I'm unable to hear you, sir, clearly. Some voice issues there. I don't know if it's on my side or your side.
You can put the question on the chat in case you're not. I am also not able to hear who is asking. Ankit, is it you?
Yeah, it was Ankit, but the voice was not clear.
Yeah. Okay. Sujay, you are also asking some question?
Yeah, Puneet,
Yeah.
it's a very good presentation.
Thank you.
But I want to highlight one thing.
Yeah.
See, this is a company wherein they do not have any pricing power
Correct.
at the out, and they cannot control the raw material prices.
Yes.
So, I mean, why do you think that market will re-rate this one? Because I think even in 2017 also, I think that this stock was at around 20 or 30, and then again for the same reasons it just shot up to 200 and then again came back, and then again one more cycle happened, and they also have some management issues.
Yeah. So some issue, like of course they are there, but as a like play, if you want to play this like segment, so amongst the competitors, amongst the whatever players like duopoly currently it is, maybe in the future if when Supreme Petro comes, as in whenever the cycle comes in. So this is the best bet that I felt amongst the duopoly that is there currently in the market. That can give me a better price because of the first is the expansion. So directly the margins or profits, whatever, not margins, but the profits will be doubling in this sector. And plus the sector is also growing at 7 to 9% CAGR. And of course, it will be more than that once any more, what do you say, applications, major other applications, once they kick in. So we'll be able to see like the share price or maybe the sales increasing. So that is why I thought, okay, this is a good bet to play on. But I feel directly, as you said, so those concerns are definitely there. The share price or maybe the pricing power that is not there with any of the both of these companies. Correct. As you are right.
It's more of a cyclical company, and trading
Yes.
could be done actually. And trading itself can give 100% here, maybe possibly, but it could not be a long-term investing bet based on no pricing power or no control on the input price of the crude. Right?
Yes.
So my question was, like, to what extent we are in the bottom of the cycle, or to what extent do you think that there is some way for growth?
Way for growth.
Yeah, so I think the question is basically, do you think that crude price can grow from $70 right now to $50? So where are you in that cycle? And second is how close is the expansion where from which they can leverage this drawdown in the crude and pass it for the profits in the bottom line. So where are in as a company in that cycle itself? I think that is the question.
So when you are having a product which is a commodity, when expansion happens, probably the other player also might be expanding, and since it is a commodity, there are a lot of other suppliers, probably who are not listed, everyone comes with their product and dumps it in the market. So
yes, yeah,
you might think that profit could double or things could go in a positive way, but eventually when you have too much of oversupply, then prices will go down. So that is the only risk I see here.
Okay, so I'll answer for that. So for ABS also, there are many different types of ABS. So one is mass ABS, the other is specialty ABS. So depending on the application, so they have, like as I told you, they have R&D center. They have 20 different types of ABSs also. So it's not like any cheaper imports, they cannot substitute them. Plus also the current these two duopoly companies that are there in the market, they are able to cater only to 75% of the demand. Rest 25%, because they cannot deliver it, that is being like supplied by the cheaper imports. So the rest of the market, the 25% of the market is anyway there to be like filled by them once the expansion kicks in. Plus also the market, as I told you, is expanding at 7 to 9% CAGR. So both these things factoring in, and plus like new applications that might come up for this product. So all these things, if we like take in, so there is a scope, and I think the oversupply area, like oversupply zone that we're telling, so that will not happen, I think, till past 4-5 years minimum, because no other company is doing, like, see, I told you that Supreme Petro is doing for 70,000 KTPA, 70,000 this ton per annum. They are doing it for expansion, but so they have not they have just done they have tied up with that Italy firm, but they have not done the expansion. They have not started the work. But this company, they have given this, as I told you, the first tender, like couple of weeks back, there was a circular so that they have given the feed and capex expansion work to this Toyo Engineering. One company is the Toyo Engineering, so they are moving ahead with. So this is one of the first movers in the expansion game. So so I think they'll be we'll see, like as per the updates when they are coming up with the updates. Okay, things are going as per the plan, and as per the schedule, current like recent schedule, they have told that by September 25 or March 26 they'll be finishing the capex. So and as per the timelines also, this is the one of the like first companies who will be completing the capex. So the demand is anyway there to be met, because I told you like 78% is there. Currently they are able to cater to only 70% of the demand. So that first they have to capture, and plus like the growing market also that is there. So both these things factoring in, I'll say that there's still scope for them to cater to the demand.
Okay.
Okay, so rest of the questions you can put in the chat. Salesh, one more question in the chat for you is, can they hedge the crude? You can answer there. We can move to the next presentation as we are short of time now.
Right.
Okay,
Okay.
so we can stop sharing.
Yeah. Thank you. Thank you so much. Thank you, Puneet.
Yeah,
Thank you
thanks a
everyone
lot.
for listening.
Yeah.
Thank you.
Are you able to hear me?
Yes. Yes, Naveen. Yes, Naveen. We can hear you. You can share your screen.
Today, first of all, good afternoon to everyone. Thank you for giving this opportunity for me. Today, I will going to talk about GMR airports. First, I will go through the contents, which is first about the company, next about the triggers, next about the partnership and future focus, and after shareholding pattern, after valuations and technical view. First, why we have chosen GMR airports for today our start, because it is the only Indian listed private airport operator. As we see in the among its competitors, among these 6 competitors, this GMR Airports is the second largest private airport operator, which is having 9 airports in 4 countries. And also it has in India 45% of passenger traffic market share. Okay, I will go to the next slide. And also you can see here. And also actually what I'm trying to tell in this slide is, major revenues of GMR airports coming from emerging countries. As you see with the other companies, they are in the specific areas, but GMR in 4 countries. I will go to the next slide. Here in this slide, we can see that GMR Infrastructure is the only listed airport operator in India, having 15 years of experience. As we compare with the competitors, it is having good experience and number of Indian assets having is good as compared with the other companies, and also it has largest market share, which is 45% market share among Indian passengers traffic, and also it has 21.9% of international passengers in its market share, and also it have number of international assets are three, and also we can see that those are the Cebu, Clark, Crete, Maldives, and Istanbul. And also as you see the Adani airports, which is only Navi Mumbai which is operated, and it is operated from last 3 years only. And also here we can see that the market share of GMR infrastructure is 45%. And also it was able to cater to expand into international regions. And also you can see that as you compare with Adani airports, which has not much giant ventures, but GMR airports there are a lot of giant ventures, and also their partners also good players. You can see that in the next following slides. And also here we can see that the revenue of GMR airports is coming from the aeronautical. From this, 25% of revenues is coming in 2023 last financial year. From non-aeronautical aeronautical segment, we can see that the 57% of revenues is coming, and other segment which is 12%, and construction revenue and sales of material we can see the small percentage. And also we can see that here the majority of revenues is coming from non-aeronautical segment. In non-aeronautical segment, previously they are doing the leasing and other activities. Presently they are focusing more on the own operated activities. They are looking to diversify their activities. And also we can see that the aeronautical revenue consists from landing, parking, passenger services fees, and other user development fees. Like these all types of revenues comes from the aeronautical revenue segment. In non-aeronautical revenue segment, it comes from the rental charges, trade concessionaires, and ground handling and cargo handling charges. And we can see that the other operating income consisting of rentals received and other commercial land development. Those all are happening around the airport project around regions. That's all revenues are taking into the account of other operating income, and also income from security and other services. Those are from the airports area where these revenues are coming from. And also we can see that the revenues coming from construction revenues and sales of material, which are from the engineering and EPC. Basically they will build the GMR airports have some of the subsidiaries which will develop the regions in the airport areas. We can see that why I have taken the GMR airports is because of the major Indian infrastructure development. We can see that the today current fleet size in India is expected to grow from 700 to 1200 or around 1200 to 1400 by 2030. And also Ministry of Civil Aviation would like to grow the current 148 airports to 230 or 240 by the financial 2030. And also Indian government is also plans to Delhi International Airport into global air traffic hub. And also the company is looking for diversifying the range of revenues, and it is more focusing on the more focusing on the own operated. And also we can see the triggers which is 25 Indian government would like to in coming 4 to 5 years 25 airports to be privatized. And also in next in coming this financial year Indian government is also would like to major five major airports will be clubbed with the nearest small 6 airports, and also 11 airports would be lined up for the privatization in this financial year. And also we can see that the in following next slide you will see the who are the partners for the GMR airports. They are renowned players, and also GMR airports would like to it's deleverage the it's up to now they have been due to their business activities their balance sheet is not much good. Then now they would like to consolidate, they would like to clean the balance sheet, and by following the some fundraise and stake sale and divestments they would like to strengthening their balance sheet. And also recently they have been changed the strategies, that whatever the some of the they have been sold some of their assets, they were funds coming from they were used for the repayment of debts. And also they have been raised from the GDP group ADP around 2,900 crores. They will be used for the repayment of contingent liabilities. And also GMR airports would like to merger. They were doing merger GMR. Previously, GMR airports will be only holding company of the GMR infrastructure. Now they would like to now they would like to whole GMR airports company would be the main company, and under there several subsidiaries and JVs. They will act according to from the GMR airport's main focus. And also we can see that the GDP multiplier which is 2 times. Actually what happening here it is air traffic, international air traffic and domestic air traffic is growing 2 times of the our Indian GDP. As we see the average Indian GDP growth is 9.6%. As we compared with other countries, our India has 2 times of Indian international, or we can say that the simply aviation industry traffic growth will be 2 times of that. In general, we can say that. Also, we can see here previously the GMR airports would be not self-operated. They will do the concession out to other operators. Those people all do the other works. Now presently they are focusing on the own under their subsidiaries. They are doing all this, and also they would like to be a satellite model. You will see actually this is my first presentation. You can see observe in the following slides. You can observe the more information. I will share the slide after the presentation. You can see that whatever the non-aeronautical business coming from the cargoes, duty-free, car parking, food and beverages, and other value-added services such as loyalty programs, digital analytics, and payment gateways. And also we can see that the other non-aero business consisting of retail, advertising, and promotion, lounges, like that. And also you can see that this also comes under commercial business. And also you can see that the engineering and maintenance services comes under operation and maintenance of airports, and also building and construction areas of airports. Here we can see that actually I have picked this company from top to down approach. We can see that the current order book of the low cost carriers is, which is we can see that the Indigo has around 980 fleet on orders. As current fleet size is 341, we can see that is around 2.8 or 2.7 times bigger the orders on placed by them. And also we can see the Line Air and also Air India. So you can see all here those orders which are placed by the companies. And also you can see the international per capita international seats per capita in our India as compared to the average of all other countries became very low. His average from 0.13, 0.26. We are expecting that to become as in 2019 0.13 in domestic seat per capita to 2x in by 2030. I will go to the next slide. Here we can see that the national monetization pipeline. Our in government of India is would like to 25 airports to be privatized by the next 4 to 5 years. And also 11 airports have been lined up for the privatization in financial 2024. And also they would like to club the 5 major airports with the nearest 6 small airports. We can see here that the opportunity which is available in the domestic and international spaces, which is immediate growth pipeline of 15 million passenger capacity in India. And also in international side, we can see that we can see here. I will go to the next slide. Here we can see that the post-merger group ADP hold the 32.3%. Majority holding will be held by GMR promoters, which is 33.7%, and public, which is 34%. Which will recently I have seen something that is I have not mentioned here. In Concalls, I have seen that the GMR will be major promoter. We can see the corporate structure, that is Delhi Airports, which is having holding of 64% for GMR and also 74% in Hyderabad Airport, in Goa, and all these airports. We can see that the current operational airports, which are Hyderabad, Delhi, Goa, Medan, Cebu airports, and under development are in Andhra Pradesh, which is Visakhapatnam, Bhogapuram Airport, as work is progress is going on. I will go to the next slide. Here we can see that the partnerships with GMR airports, and also here we can see that the national India First Infrastructure Fund would like to the 4.3 billion US dollars will be using for this Indian airports development. And also we can see the Europe's second largest passenger airport, Fraport, is also in partnership with them. And also Malaysia airports, and also Terna, Kia, Megawatt, these all are the them partnerships. These all are the renowned names. Here we can see that the Delhi International Airport and Hyderabad International Airport, majority of these coming from their major sales. 70% of India airports, which are just to 90 within we can cover within 60 to 90 minutes from the airport, from the Delhi airport, which is situated in Delhi in northern part, which will acts as the regional hub in north side, and Hyderabad will be in the south side. And also government will be more focused on Delhi airport to make it as an international traffic hub. And also we can here see that the so many data points. Air India and Indigo measure their strategy to future plan, and those are also beneficial for GMR airports. And I will go to the next slide. Here we can see that some of the competitors' revenues as compared with the GMR airports, Vinci airports, which is 83,000 crores, and GMR airports has 7,737 crores current last year sales. You can see all that. We can see that the number of main here focus is number of airports operated by the large player, Vinci airports, which is 65 airports. For GMR, which is 9, Avia Alliance, which is 5, Ferrovial airports, which is 4, Grupo Aeroportio del Pisio, which is having 12 airports, and Atlantia having 5. And here we can see that the number of passengers in the millions in last 2020 traffic. Here we can see GMR airports is the largest airport as after the Vinci airport and operated in the more number of countries as compared with the other 4 competitors. GMR in best place. And also we can see that the cash flows and ROC, basically it is a turnaround company. Because of this, these all are not much good looks. And also here we can see of the promoter shareholding, which is 61% in 2017. Now they are having 59%, and DI is having 4%, public having 8%. Here FIS will be increased from 20% to 28% from 2017 to 2023. And also here we can see the profit loss statement of the GMR airports. As you see that in 2012, from 2012 to here, recently in last 5 up to 2018, there will be more losses. We can also say that up to 2022, there will be more losses. Recently, from last 2 years, losses will be reducing, coming down. I mean, I would like to say that the company, here we can say that the company is doing some activities to reduce the losses and improve the financial condition and align with the India's aviation story. And also we can see that the risks in this company is 68% of promoters holding 59% is pledged. Here is one of the biggest risks, and having contingent liabilities. You can see the major chunk is by the corporate guarantees, which is 3,800 crores in 2023, in which currently GMR airports have been raised recently 2,930 crores from the ADP that have been used for the repay the all corporate guarantees for last financial year. We can, as we remove that, and also we can say that the around 1,100 crores contingent levels will be pending, which is we can say that that is somewhat small as compared with the past. And also you can see that the recent money laundering and other risks posing with the GMR airports. Some of them here I may have mentioned. Also here we can see that the companies are doing for strengthening their balance sheet, which is divestment of 40% stake in one of company, and also partnership with the national, and also getting funds from NIAF, and also continually exploring options for optimizing the funds, and also stake source the group ADP fast. And also I have seen that the last conference call, recently Delhi airport became profitable, and remaining airports also will be become profitable, guided by the company in next 3 to 4 years. Post merger of GMR airports, it will be in good position to raise funds for future growth, and also it will be able to reflect its financial previously in GMR Infrastructure Limited, because of its holding company as GMR Airports. There is holding discount in the market. Currently, after merger, it will become more, getting more valued. Actually, this is the technical view. It looks 77 will be good, but you can see that it is not much profitable company. It's looking turnaround. I would like to, Puneet will give guidance on some valuations about this company. Actually, this is my first presentation. If any mistakes, please correct me.
No, Naveen, it's a wonderful presentation. I think for all of you, is the junior most guy in the group as of now.
Yes, sir. Actually, I have been some other works. I have not improved this presentation past 10 days.
That's okay, Naveen. Don't worry about that part.
Thank you, sir.
Yeah. So, or there is always a first time, and after first time, we all improve. So yeah, any questions to Naveen?
What's your view on its valuation and turnaround story
So,
about this?
yeah, so when the company is turning around, right, it is very difficult to value in terms of P ratio or those kind of ratios. We have to see when it can become profitable. So my thesis for GMR Airport will go towards non-core income. So that non-core income will be more stable, and it will be definitely having some portion in the total revenue, total profits. So I want to see whether that portion is becoming a consistent bigger part of the total sales and total profit. Once that happens, it is very easy to predict after that. And the way they are expanding, I hope within next 2 years, we could see some profitability emerging out of it. And I think the market has anticipated that, and it started moving the stock in that direction. So the problem with these kind of stocks is when the things are uncertain, you don't want to bet upon it. And when things are certain, it will be costly, right? So when all the things are in your favor, the GMR airport will not be available at 70. It would be available at 200 rupees.
Sure.
Right? So we have to think in that direction. We want to buy at 200 with all the certainties cleared, or with the uncertainty, we buy at this point of time. Technical shows, yes, it is breaking out, and some people are betting upon it at these valuations.
Over next 5 years, we can see some improvement in the business, sir. I think.
Yeah.
Not immediately.
Yeah.
Any
So yes. Yeah, go guys. Any questions to Naveen?
See, a lot of things on the interest income, control. So what is the debt outstanding? That is getting a lot of money from the income that they generate.
Here we can see that the basic fundamentals of GMR airports. It looks all are not much good as a investment company because of its turnaround story.
Yeah, what is the debt?
So yeah, Mahesh question is, what is the total amount of debt they have? If you have captured that number somewhere.
Yes, sir. Actually, debt. Here I will be add debt to the here. Here there is 31,000 crores. It is actually debt.
Okay.
Basically, we can say that the airports business is not profitable business. As it will grow future on future, we can actually, I would like to also highlight the tariff structure which is used in the airports. Puneet sir, can you able to me more on airport traffic?
Yeah, so airport traffic will definitely increase. So no doubt about it. And even the number of airlines, they have placed the orders in bulk. So the Boeing and Airbus has the highest order from India only. So considering that, I think India is going to grow in that traffic segment. There is no two ways about it. So my bet is more towards not from the air business. I am saying from the non-air business, the lounges, the airport maintenance, the shops. Those business will give its profit actually.
Yes, because
And the airport traffic would give say break-even kind of a thing, and the non-air business will give its the profitability.
majority of revenue is coming 57% from those non-aeronautical business.
Yeah.
I think it would be improved over the year on year. Once it gets a break even over next 3 years, over time on time, it will be catch up with the debt.
Yeah. So yeah, thanks Naveen for your presentation. I think it looks a turnaround story. Let people go through your presentation. We will share with the people also. And you can stop sharing. I will just have the 2 questions with the audience as well, audience time. Yeah, Puneet sir, you wanted to ask something. Puneet sir. We are not able to hear you, sir, if you're asking something. Okay, no problem. So we'll go to our session of ALD. So you can see my screen, right? You can see my screen, right, guys?
Yes.
Yes.
Yeah,
So we are back to the audience time. And yeah, so be ready with the chat. And our question is coming next. You have to press the options, basically A, B, C, D. So IRIDA is Maharatna, Navratna, Miniratna, or what? Okay, so a lot of answers are there. So I think the answer is Miniratna, and Nilimaji has the first answer on IRIDA. So we'll go to the next question, and you have to crack the next question also correctly. GMR airport assets are spread over how many countries? Yeah, so the answer is D for this. I think the person who has given the first answer on D is, let me check. I think Shivani and then Deepak and Mahesh. Okay. So did you guys answer the first question correctly? Yeah, I think Shivani has correctly mentioned. I need to see who has answered both first of them correctly. I think Mahesh Burase has answered them correctly, I think, in the sequence. I will check them off. And possibly, I think between Mahesh or Shivani, I think one would be the winner. I will just go through the chat again and see the options clearly. So yeah, thanks a lot for attempting the questions. And we can end the session for today. And thanks for your joining today. We will meet again tomorrow, 9:40 a.m. And tomorrow there will be 7 stocks, one by one. And I hope it has taken your learning to a new level. And be patient and be with us, because some of the people are trying for the first time. And this is an opportunity for all of us basically to learn something new, to present something new. take the next step towards learning. So it would have been very easy to invite the best of the speakers and do the presentations always, but then we will not grow, right, to present and to deep dive further. So idea is we should learn, and that's why we are presenting at our side itself. So bear with us basically, at least for 1 or 2 more sessions like that, and then as a group we will grow fast. So definitely we'll meet back tomorrow again, 9:40 AM. I will just get back to you in the chat on these points. Okay, so thanks all. We can close. I'm stopping the recording and stopping the session also.